Hello, this is Erin Swenlin from DecisionPoint.com. I am here with your daily five. I'm going to show you the five charts that I think you need to see going into this week. And I think they're very interesting. And I think a lot of people are going to be very interested in knowing what I mean when I talk about this is the start of the bull market. First, I do want to mention that I do run a website, decisionpoint.com, and we have two of the excellent publications that we do, the Decision Point Alert and Decision Point Diamonds. Decision Point Alert is going to give you all you want to know about the market and trend and condition, and Diamonds are going to help you find the best stocks that will ride the tide or weather the storm. So come check us out and get your 10 stock picks in Decision Point Diamonds per week and the total market vision of what is going to go on the next day, the next week in the Decision Point Alert. We've been talking about this chart, the S&P 500 SPY chart of the daily 5 months candle. And the bull market starts here, and that is why the title of this video talks about that bull market starting here. We still need to get price up there, but once we get there, it'll be that magical 20% or higher move, and that will imply that we are in a new bull market. Carl and I still believe that overall there is going to be a bear market, so this will probably be more of a bull market within a bear market context, if you will. And, we're going to still see prices rise if we get to that level, I believe. But the problem is we have to get to that level. And there are a few problems there. We have a bearish rising wedge, and the expectation for this pattern is a decline, and that would mean a loss of support at $400. It would mean a loss of support at the key moving average here, the 20-day EMA. Lots of bad things should we lose this support level. But Carl and I believe that there is support to be had further down right here at these tops that we saw back in December, the lows back here in November, high back here in October. This is a very strong support line right here. And that's where we think we're going to see the market pull back to. Now, there could be a lot of other things that happen, a lot of noise that might make the market do something different. But ultimately, this is what the technicals are telling us. The PMO is still rising. The RSI is still positive. And you can see the VIX is still mostly oscillating above its moving average on our inverted scale. And that tells us there's internal strength. Additionally, I can tell you that stochastics were rising the last time I saw them, and that also implies internal strength. But all is not good under the surface. We have some problems going on with our Swenlin trading oscillators and the ITBM and ITVN. So the problem, we have seen the STOs turn down. That's a big problem. That happened on Friday for the STOB and yesterday for the STOV. We also saw both of our intermediate term indicators turn down as well yesterday. Bad news. And then if that weren't bad enough, we have negative divergences that have all come together here. You can see from this top to this top, we have lower indicators. Their tops are moving down while prices tops are moving up. That's a negative divergence, and that does suggest there is some weakness in the market. So what do? We have STOs and ITBM, ITVM telling us there's weakness, yet we look at an RSI and a rising PMO and have to wonder, right? Well, the PMO, although rising, is very flat and could very easily turn down. So that's one of the issues that we have there. We can't unprint these negative divergences. Those are there, and we don't always get them. But when we do, we typically are going to see a decline. I think the only exception on this chart really is back here, because we had the decline, they moved up on this, and then we got the negative divergence. And rather than getting a decline, we got a little bit more of a consolidation. But back here, we had another negative divergence with price, and that did lead to a downside move. There are positive divergences to be had, but we don't have one right now. But you can see when the indicators are moving higher and the bottoms on price are moving lower, that's actually considered a positive divergence. And you want to see those. We saw one there, came in right before the big rally. So we keep very close tabs on these indicators in the decision point alert. So you will be aware before a lot of other people when we get these kinds of positive divergences and negative divergences. So certainly consider coming up for, I hate to be a commercial, but I'm really trying to help you out here, because we do look at all these charts, and I think that what they're telling us now is important to listen to. Golden Cross and Silver Cross indexes, these are exclusive to Decision Point. Carl came up with these. I wish I could take credit. And what they basically do is tell you a Golden Cross index. I think most people are familiar with a Golden Cross. That is when the 50 crosses above the 200. So the Golden Cross index basically counts up how many Golden Crosses are in the index. Right now, 57% have a Golden Cross. The Silver Cross Index is a little different. We consider Silver Crosses a 20, 50-day EMA positive crossover. So that is something that you can consider. Well, at this point, we have, as far as how many Silver Crosses, a very healthy amount. And you can see they are still expanding. However, they're probably not going to continue to expand. Why? Because we have fewer stocks above their 20 and 50-day EMAs. You can see lower percentages. That means that this number, the Silver Cross Index, is not going to be able to move higher, because we don't have more stocks above their 20 and 50, and that is required in order to get a Silver Cross. As far as the Golden Cross Index, the reading is okay, but we did get a turn on it, so we're a bit worried about that. But at the same time, we have a higher percentage above their 50 and 200-day EMAs, so it will actually have a better opportunity to expand than, say, the Silver Cross. But what it's telling us is that there is some weakness out there. We are losing this participation. It's not horrible yet, because the Silver Cross hasn't turned down, but the fact that the Golden Cross has is a concern to us. Let's look at the communication services sector. This has been the winner for quite some time, a winner that will probably keep on winning, barring the market turning south and looking terrible. On the pullback, it might struggle just a little bit, but I didn't really find any other sectors that I was happy with to present today. So I'm going with the winner that hopefully will keep on winning. You can see that the participation under the surface for XLC is outstanding. 92% have price above both their 20 and their 50-day EMAs. I mean, you can't go wrong with that. This is a bit of a problem. We did see a downturn in the stocks above their 200, but I will tell you, I'm not overly worried about that. And the reason why is because you can see that XLC itself lost the 200-day EMA as support. Well, guess what? Most of the stocks in XLC look like XLC. And that is why you're seeing that big decline here in stocks above their 200. Take that with a grain of salt. Stochastics are still oscillating above 80. You can see that overall relative strength is still continuing against the market in this sector, looking pretty good. So I had to find a stock within XLC, and I will tell you, I had a little difficulty this morning finding stocks I liked. So that's also a little bit of a warning back there, that before we're going to start that bear market or bull market, we probably have some downside that we're going to have to endure. So I liked Snap, basically tiny little breakout above this area of overhead resistance. It is matched up with what I'm seeing as gap resistance. And that gap is still in force. We don't have price having covered it yet. So this could be a strong area of resistance, could slash and should be, but it isn't. We do have the breakout here. And the expectation is we will fill this gap eventually. It's going to take some time. I would look more at not necessarily the gap moving up to the gap level over here, but I would be looking at a move to $13. And that would be a tiny little, I believe if I counted it right, at least a 15% or more gain on snap. So that's something that you might want to look at. I don't think it's too late for this one, but I would just be careful making sure that the PMO stays rising. The minute it turns over, I think I would be heading for the doors. But right now, I think we have some opportunity to move higher up to that $13 level. And that's all I have for you for your Daily 5. Again, my name is Erin Swenlin from DecisionPoint.com, and I want to wish you a great trading week ahead, and thanks so much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.